Your credit score just took a hit so hard, it's basically in witness protection. And if you've ever had a car repossessed or a loan go into default, you know exactly what that rock bottom moment feels like. But here's the thing nobody tells you. Millions of people have rebuilt from worse, and the path forward is more systematic than you think. Let's talk about what actually happened, because understanding the wreck helps you avoid the next one. A default or repossession doesn't just ding your score, it can crater it by 100 to 150 points overnight, and it stays on your credit report for up to 7 years, like an uninvited house guest who knows all your secrets. The real catalyst here is usually not one bad decision, but a cascade, a job loss, a medical bill, a few missed payments that snowballed before anyone hit the brakes. Think of your credit like a bonfire. It takes time to build, seconds to extinguish, and the neighbors remember the smoke for years. Here's where people get the psychology wrong, though they treat a damaged credit score like a scarlet letter instead of what it actually is. A lagging indicator of past behavior, not a permanent identity. The optimism you had when you signed that loan is still valid. It just needs a new strategy attached to it. So what do you do first? You pull your credit reports from all 3 bureaus, Equifax, Experian, and TransUnion, completely free at annualcreditreport.com, and you read them like a detective because errors are more common than you'd expect. And disputing them is free money, essentially. One study found that roughly 1 in 5 consumers had an error on at least one report, so don't skip this step assuming the bureaus got it right. Now comes the part people either rush or completely ignore: secured credit cards and credit builder loans. A secured card requires a deposit usually between $200 and $500, and that deposit becomes your limit. But used responsibly, it reports to the bureaus monthly and starts stacking positive payment history like bricks on a new foundation. Credit builder loans, often offered by credit unions and community banks, work the same way you're essentially paying yourself while building a track record. History tells us that a score can recover meaningfully within 12 to 24 months of consistent, boring, unglamorous on-time payments, and yes, boring is the point. People who rebuilt fastest weren't financial geniuses. They were people who automated their minimum payments and stopped checking their score every 3 days like it was a stock ticker. Let's kill a misconception right now. Closing old accounts does not help your score. It actually hurts it by shrinking your available credit and shortening your credit history. And no, applying for 6 new cards at once to diversify is not a strategy. It's a confetti cannon of hard inquiries that signals desperation to every lender watching. The practical playbook looks like this. Keep your credit utilization below 30% of your available limit, ideally below 10% if you want to accelerate recovery. Pay on time, every time, even if it's just the minimum, because payment history is 35% of your FICO score, and it is the single highest leverage habit you can build. Becoming an authorized user on someone else's well-managed card is one of the most underrated moves in credit. Rebuilding, you inherit their positive history without even using the card. Just make sure the person you're asking actually pays their bills, or you've just swapped one problem for a family dinner's worth of awkwardness. Here's the philosophical truth underneath all of this. Credit is not a measure of your worth as a person. It's a measure of predictability. Lenders want to know you're boring in the best possible way. The discipline of showing up consistently, month after month, with small correct actions, rewrites the narrative in the only language credit bureaus understand. Sizing matters here too. Don't overextend trying to speed run recovery by taking on more credit than you can comfortably manage. One missed payment during a rebuilding phase hits harder psychologically and numerically than it would have before. So keep your obligations tight and your habits tighter. The irony of credit recovery is that the slower you try to go, the faster it actually works. Patience applied consistently beats urgency applied recklessly every single time. You don't need a perfect plan, you need a repeated plan. And honestly, be at peace with the timeline. 7 years feels like forever until you realize that 7 years from now, you'll either have rebuilt or still be wishing you'd started today. And those are 2 very different versions of the same future. Whether you're trying to qualify for a mortgage, get back into a car loan, or simply stop getting rejected at the worst moments, we can help you build the foundation you need. Check out our links in the description below for real estate investing guidance, home contracting resources, and trusted lenders ready to work with you where you are right now.